financial services were offered by the incumbent financial institutions, banks, as a bundled service offering for the customer, right? And then fintechs came in and tried to, in the name of democratization and decentralization, they unbundled financial services. In doing so, they were able to set new standards of customer service. They were able to bring about benefits like mobile-first experiences, and they actually spurred competition in the industry, which ultimately benefited the end user. But as a result of that, what we now have is a bit of a fragmented customer experience. So now customers have multiple different apps, applications, programs, platforms that they need to go to access the same kind of financial services. Now, even though they're better, they're more enhanced, over time, it becomes difficult to manage. And so what's inevitably going to happen is we're going to revert to where we came from, and there's going to be what is called a rebundling. So rebundling essentially entails the entire suite of financial services that a consumer needs to manage their lives, needs to manage their finances, are going to be put in a specific place or bundled in a specific place in order to, or with the aim to save time, save money, and give convenience to the customer. And this is, as much as it sounds like retracing your steps, it's actually in line with what the customer demands already. It's rather putting yourself in the shoes of the customer, seeing the world through the eyes of your customer, and working backwards towards the technology. So again, the technology doesn't take precedence, right? And this is actually happening in China and spreading to other parts of the world. So WeChat, for example, is the definitive super app, neo super app in China, with which consumers are able to book a taxi, send messages, make purchases, inquire about financial products or services. So rebundling is in line with what the customer wants, and it's more about being able to identify the customer's needs and pain points and reach out to them and provide them solutions that give them where they are and give them a wholesome experience, right? Now that is also a good segue into what is now being called fintech as a service. Now, whenever you try to scale or go global, you most likely will have to sign local agreements, deal with local regulation, possibly set up a local entity. And that can take months, if not years, especially if you're trying to conquer the world, right? And that's where fintech as a service comes in to try and do the heavy lifting associated with scaling. So the best analogy for fintech as a service is to look at what Amazon did with AWS in the field of technology and financial services, right? So before, if you wanted to set up your own service, you had to find your own database, build your own firewall, get the space to accommodate the servers. If you needed to expand, you had to buy more equipment, sign more agreements. Now with AWS, one API, one integration, you're connected, one agreement, one invoice, one payment, and you're good to go. And that's exactly the same kind of service offering that fintech as a service is going to offer to global merchants. So right now, all you need is one API, one invoice, one recon file, and you get an access to a bundled suite of fintech-related services that is going to handle your operational fintech expansion issues so that you can focus on your core business, right? And it's all going to be powered by the fact that there's increased adoption in technologies like cloud software, artificial intelligence integrated with financial services. There's the growing utilization of smartphones and fintech-related services through digital platforms, right? Our friends at the markets and reports guys tell us that by 2030, or the better part of this decade, the market value of that fintech as a service industry, which is already in existence, is going to go upwards of 900 million, right? And as we've already said, the COVID-19 pandemic accelerated some of these journeys, right? So essentially, the message here is that all your consumers are partners on your mission, right? You need to think of the consumer as in the room. Earlier on today, we heard that you need to involve a consumer who is thinking outside of the rigid lines of what the internal corporates are, and it gives you the creativity to develop outside those lines. Okay, now let's move on to one of the technologies that has gotten a lot of hype lately, Web 3.0, right? We hear this a lot recently, right? So Web 3.0, quite simply, is said to be the bundle of technologies that are supposed to usher in the next generation of the internet, right? Our friends at Bain & Co. tell us that that ecosystem now boasts thousands of companies, and there's substantial investments, upwards of $18 billion, going into startups within that ecosystem. And now you have big players like Nike, Google, JP Morgan, all experimenting with the technology just to understand what the benefits potentially could be and what that technology could unlock for us. But let's take a step back and try and identify where we've come from to get to this point, so just so we're on the same page. So remember the days of Web 1.0, right? This is the era between 1990 and 2005 where we had basic websites that were all built on HTML, right? I shared a joke with my friend where he said that these websites were essentially glorified Microsoft web pages, right? Remember the days of dial-up modem when you had to actually wait for the phone to connect to the internet with that screeching noise that, in my opinion, could cause seizures, right? I actually don't. There should have been more reports of people having seizures waiting for the internet to connect in 1995. I don't have the data, but I'll check. But essentially, it was a very static content delivery network, right? It was called the read-only web because essentially that's all that you could do. But it was what spurred the dot-com bubble that lasted from 1990 to 2005 and brought about some of these internet giants. And now fast forward to today where we have Web 2.0, where the internet began to evolve to more user-generated content, more user-generated experiences. And this was called the read-write web. Right? This is where terms like blogging, vlogging, social media networking, social media, podcasting, all of these terms became popular, right? This is the era where this is what gave rise to the tech giants like YouTube, Facebook, Wikipedia, all of the ones that we know today. And essentially, it invented what is now called as web as a platform, where you could actually build software applications on the web as opposed to on the desktop. And now we're at the point where we have Web 3.0. Now, Web 3.0 is essentially, as we've said, the bundle of technologies that are supposed to usher in the next generation of the internet. And the expectation here is that the internet is supposed to be a little bit more intelligent and should be able to disseminate and basically distribute information in such a manner that would be akin to how humans do this. And this is based on a number of technologies, right? So I don't know how many of these you've heard about, but it's all part of the suite that make up the Web 3.0. So edge computing, where data is being processed closer to where it's being generated, so that you can now process higher volumes, you can now have higher processing speeds, so you get like larger or more insightful or insight-driven leads for actions, right? We have the semantic web, which is the expectation that machines will be able to interpret and recognize data and information in such a manner that is akin to how humans do it, both contextually and conceptually. I mean, it sounds a little bit pie in the sky, but that's the expectation, that data is no longer owned, but it's shared with different web services that provide different views of the same kind of web data. And this is going to be a hyper-connected, more engaged internet, right? You add in blockchain technology, and you're supposed to get the benefits of transparency and security that an open public ledger gives you, right? If you add in AI and 3D graphics, we're now moving into what is being called a more immersive internet. And we'll talk a lot more about that when we get into the aspect of the metaverse, right? That word. And so all of this is going to bring about more connectivity, ubiquity. That is the theme of what the internet is going to be.